Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Thursday, December the 10th. The year's 2020. Let's talk trading. Preserving Capital, Part 4 with Walmal. These videos are for educational purposes only. Your results may differ from mine and from Walmal's. Walmal, how you doing today?
I'm doing pretty good. I've met my core of what I wanted to make today, so that's a good thing. And I've even done some. I actually went and hung up the trading shoes, so to speak, where I'm just gonna go and just hang them up and just not trade anymore. Today I'm gonna look at the market, but I'm not gonna trade anymore. I'm trying to go and follow my plan where I want to take this month and take it a little bit easy.
So, in other words, you're preserving your capital.
That's exactly right. I'm preserving my capital. It's been a good year for me. I'm not going to go and try to distort that in any way, but the reality is it's been a long year, and so not just with trading, but also with all the things going on in the world today. And so I'm a little tired. So and a part of that is that. Part of preserving capital for me anyway is I need to get proper rest. I need to make sure that at nights I'm getting proper rest, and I need to make sure that I'm getting proper time away from the screen, getting some downtime from the screen. So that's what I'm trying to do this month.
Yeah, so you were telling me before we went on, you said, yeah, you take the lead. Because yesterday I think I told everybody that I just decided not to trade yesterday because I was just the market was just not smiling upon me at all. So this morning I took a trade because let me bring up the screen here. We were yesterday we had this huge return bar, or we pointed out this huge return bar here. I think it was actually from a couple of days ago, on the H1 or H4, and I believe Walmal, we talked about price coming down to actually I think it was on the H4 time frame we might have been looking at it.
Yes, sir.
Right here, and it was right around this 32.65 area. We said price needs to return here. And sure enough, it did. And not only did it return to that return bar, if you look at the 1 hour chart, you can see over here, there's this return bar. Now you see this bar has, little to no wick. Actually, this one doesn't have any wick, neither top nor bottom. So that's what we call a return bar. Well, this morning, this candle right here was dropping like a rock, and we were on the phone. I said, "Hey, Walmal, who called that 32.60 or whatever?" And then this candle closed, and it continued, and then price continued to drop. I said, "Well, hey, price has to come back up here to like the 3,200 level, 32.05 to be exact, 32.06." And I said, "You know what? Price has to get there." So and to myself, I'm thinking, it comes down to the 40 area, which I know is the launch pad. Anytime I see it's going to go up. So I go, if I can get price to jump above 50, I'm long. Well, I wrote it up to, what was it, about 70, I think 70 something. And then it hit 75, reversed. I stayed in, went back up, and then it was coming down. I think I saw a red candle on M5 starting to form. So I just took about 20 pips profit off the table. But I was saying, even before I got in the trade, that this sucker's going back up to 3,300. And of course, I've been kicking myself a little bit for not staying in the trade, but it did retrace about 10 or 12 pips. And who knows, I might have gotten out and really been kicking myself. But the whole idea was, you know what? There was profit. I took my trade and I said, you know what? I made about 20 pips. I've been having, a rough patch this week. I'm done for the day.
And that's exactly right. What you did was you went and you preserved your capital. And capital, it's the amount of equity that you currently have in the market. It's how much money you actually have there. And the reality is, if you're up 20 pips, you know what, I can close my trade out. I've got 20 pips times whatever lot size you're doing, additional capital that I can go and use. Now part of that capital may be used to go and help you with in terms of living expenses, but part of it also should be used also to go and build your account size up so you preserve your capital. Sure, you know what, that thing could have rocketed 30 pips even further high. It also could have gone and taken you out, at wherever you had your stop loss at. We don't know. But you know what? Preserve the capital. Preserve what you've made, because the money that you've made is it's nobody else's but yours. But the thing is, it's not yours until you close that trade. And so close the trade, make it yours. In fact, it was at one point in time at the 80 I did this type of thing where I went and got into a trade and I only made a few pips. And when I made that few pips, I was like, I took it, put it in the bank, and I waited for another signal, and then when it crossed the 80 on that new signal, I went and took that trade. Again, I made a few pips, but I didn't get the 20 pips like TRO did, but I got what I needed to go and do and make my core for the day and go. And I did it that way because what I'm constantly doing is trying to preserve my capital, and I want to go and take my winning trades and turn them into capital as quickly as possible. That's my mindset. That's the way I do things. And because I keep my stops close, I can get away with that. Now, if I'm sitting there with 20 pip or 30 pip stops, I couldn't trade that way, because what would happen is I take one loss, and then I would have to go and take 20 trades, not 20 trades, but 15 trades maybe, to go and make up that big stop loss. That big stop loss. I'm not going to go and do that. I keep my stops close, and so for that reason, and because of the way I go and trade, that's what I do. I like to put the money in the bank, and that's just one way for me to go and do it.
Exactly.
And we were talking about this earlier, or maybe even yesterday. Is it easier to go and put 1 pip in the bank, or is it easier to put 10 pips in the bank? Well, obviously, it's easy to put 1 pip in the bank. So I just take that philosophy and say, I'm not trying to pick up 1 pip on a trade, but you know what? If I go and get into a trade and I'm up a pip, I'm up 2 pips, I'm up 3 pips, I'm up 4 pips, I'm up 5 pips, and all of a sudden the market just stops moving in my direction. Hey, I'm gone. You know what? I'll take my 5 pips. I'm halfway to core. Take my 5 pips. There'll be another trade that comes today. I'll make the other 5 at some other trade. But how many times do we go and get into a trade? In fact, I saw it happen today to me, where I went and got into a trade. I was up 7 pips. In fact, I was on the phone with TRO at the time. I was up 7 pips, and I wound up walking away because I didn't punch out like I normally do and like I should have. And the next thing you know, it came all the way back and hit my stop loss, my break even plus 1, and I wound up getting like 1.8 or something crazy stupid like that. And that was foolishness on my part. It was absolute foolishness where I could have walked away and had 7 pips in the bank. So I did not preserve my capital at that point in time, that's for sure. But as traders, we make mistakes. So what do? We live, we learn, we go on. And we just go and say, okay, next time I'm not going to do that.
Yeah, because I've got the M5 chart up on the pound dollar right now. And if you look at the range indicator, I mean, we've had the previous was 8 pips. The previous from that was 2 bars ago was 9 pips. 3 bars ago was 19. 4 bars ago, 11 pip candles on the 5-minute chart. So, you can make it or lose it that quick.
Yeah, and that's the truth of the matter. So again, because of my style of trading, that's why I do what I do. Now, for somebody else, it may not make sense, but that's okay. But make sure that you've got a trading plan that's going to go and work for you.
Yep, because I took that trade that we talked about before down here around this 53, which was also the open low or the holo right here. And if you've got the holo indicator, you notice I made an upgrade thanks to Walmal. He said, hey, can you put the pip count, the distance here? So I did that. So when I release the next batch of donations, actually be the final batch for the year, you'll get that in the build 1200 file. Actually, I need to change that name next year to build whatever we're on. I don't even remember what we're on now. But see, what happened was I rode that trade all the way up to, I think, this point right here. So there was some pullbacks, but when it hit this, no, actually I wrote it up to here, not to here. And then it hit this level, it hit high of 75, and then it started pulling back. And then see, it shifted over and pulled back some more. And it was like, you know what? I'm not going to give that much back. I got 20 pips in the bank. I'm going to preserve that capital because, you know, the way the pound's been moving, it could have flashed down. But then, of course, it flashed up, and that was a miss on my part when it came down to right here, just at the top of the rat zone. It came down to the 67 level. But once again, you know, looking left on the H1 chart, from that previous day, when it flashed down to here, you can see there's that return bar right there, and that was a signal to get back in, which I missed, and I missed out on a huge run. But I'd already made up my mind, I'm preserving capital.
Right. And the thing is, you know, that idea of you getting out at that 75 level is probably a very wise thing to do. Sure, it did flash up, but here's the reality is that 75, we know that's a psychological level. We know crazy things happen at that level. And did you know when you got out of that trade whether it was going to shoot up off of that or shoot down? You have no idea. You very easily could have, you know, had that thing shot down and flashed down instead of flashing up. And the next thing you know, it may have even overrun your stop. You don't know, you know, and that's the thing. Okay, let me go and plan my trade a little bit. Okay, I'm at 75 level. It's sitting here. It's hovering here for a second or two. I'm up 20 pips. It's actually gone up to 80 now, or, you know, and it's now run back down a little bit. You know what? I'm out of here. You know, take my 20 pips, put it in the bank. You know, now I've got 20 pips of profit that I've got more room to go and trade in another day. So that's a good thing. That's a win. That's a win-win situation because you got a win because you actually got the win on the trade, and you got a second win because you got more capital to work with for the next day.
Exactly. And like right now, we're looking at a 10 pip range on M5. So there's pips to be made, you know, just taking these trades. I mean, it came down, it touched that 70 level, and you can see here how prices moved off that 70 level how many times now. And that's part of looking left, and that's just saying, that's just trading what you see.
Yeah, I mean, even this hour, it's moved off that level 3 times. But you going not the previous hour, but the hour before that, so basically 2 hours ago on your chart, I mean, it came off of there as well. What, 1, 2, 3, 4, 5 times I see it came off that level. You know, and so, yeah, and some of those levels were actually, it was going down, and sometimes it was going up, and sometimes it may have only been, you know, literally a couple of points or something, but it did come off of it. And so, yeah, those trades may have been break even, maybe even a small loss. But all those other trades that are in there, you would have made a nice. You would have gone and banked a number of pips that would have made up even for those small little losses that you may would have taken, as long as you go and, you know, have proper, you know, trade management in place so that, it's going against me. I thought it was going to go up and it's going down, and I went long. Okay, let me get out of here. Let me wait for the next opportunity. You know, or you may go and say, you know what, I think this really is going to go back up because of X, Y, and Z, whatever those 3 reasons may be, and I'm just going to wait to draw down as long as I don't go and hit whatever my cutoff is.
Right. And actually, we're looking at it here. 80 was the Walmal short line right here. And you can see there's pips to be made to the short side. Once,
yep. I mean,
twice
the first
this
5
hour.
minute,
yeah,
the first 5 minute bar, you could have made, you know, easily gone and made 10 pips, you know, and then the last 5 minute bar, you went above it, and on my chart anyway, I don't know about yours, but it closed above it, and so on this particular bar here, the current bar, you could have gone in and you could have gone and picked up 3, 4 pips.
Yeah,
you know, potential. You know, I don't know if you would have or not, but potentially could have picked up 3 or 4 pips.
Yeah, and you know what? It's the fastest 15 minutes of trading is over. So, fellow traders, I hope you learned something about preserving capital. It's sometimes you're preserving capital to make sure you don't lose, and sometimes you're preserving capital to keep your wins. So when you're trading, just remember, it's not what you trade, It's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.